There you go. You can also enjoy these lessons and study with this information. Okay, so that's basically the idea. Again, this is going to be only English, and we are going to upload it to the YouTube channel, and for the first time, and also sharing on social media here on Instagram. Okay, see, we've been through from the book on the main theory, the main ideas. But again, I would like to go also here so we can get through a few topics that we haven't been talking about. And on this lesson, we are going to go for the candlesticks, okay? And we still have a lot to go through. We have people points, that's big, market pressure, market identification, price identification, market pressure, Japanese candles, open interest, people points, many things to go through. Many things to go through. Okay, we have more people join here. And so on this particular one, I would like to go for first the market situation, but also candlestick. You know, candlesticks are very important because actually that's the only tool we have to identify the confirmation of prices. You know, so many of you are kind of still with that question and how you know when is the confirmation and why is the confirmation? When do you know that it's a buy prices to go for? When do you know it's sell prices to go for? So those, of course, are the questions we all have at first when you're approaching price action, because you're not reading indicators. You got no moving averages, you got no MACDs and RSAs and nothing of that, none of that. The only information you have is prices, and what you're going to use for prices is actually the candlesticks. You know, candlesticks, the only tool that we actually use to read prices in the market. Okay. And that's basically the idea here. So as you can see, well, the index, I'm just pointing the topics that we have still go through. We've been through all of this preparation. Then we got price action here. Equilibrium price. We talk about a lot of equilibrium price on the first lessons. Trend and market areas. You know, what is a trend? What is a market area? Remember that in price action, we don't use the term and we don't use the trend. We use market area. The trend is something that you can analyze at the end of the year. So you can say the trend of the dollar was up or the trend of the dollar was down and so forth. But it makes no sense to use a trend for price action because we have to identify if the market is into buyers or into sellers. So that's basically the idea. Okay, so I'm just opening here Instagram, but of course nobody's gonna watch it because it's the first time that I'm sharing this information there. But just to have it also on social media. Okay, so at this point we all know what market situation we are in terms of market area. Okay, so the next point is to identify market ranges, market intervals, and when the market open for buyers, when the market open for sellers. So I'm gonna move towards the map prices. Then we have here page, from page, I'm gonna say 23, page 24. We have many map prices, but this is basically the idea. And you have to learn how to do it yourself because we don't have all the market levels. You know, some years you're gonna have market levels that there's not gonna be in the book. Okay, so you have to be able to identify them. All right. So now is more waiting here. Okay, so let's go here to the market and see the current situation right now. And then I'm gonna get back to the book and we're gonna go through candlesticks. Okay. If you have any question about people points or anything else, we can go through it, but those topics are coming in the future lessons, not on this one. Okay, so here we got euro dollar, and today the market opened for sellers. At this point, with the previous lessons that we had, you should be able to identify how the market opened today on everything. So you're able to tell me how the market opened on Europe and how the market opened on the US. And of course, This implies to have exercises. You need to have exercises to actually recognize that information. Okay, so here, for example, we got the euro dollar in the European market today, and we are at June 28th. It opened for sellers. European market opened for sellers. And then the US market opened, and we got buyers. So basically today, the market was pretty mixed. Sellers and then buyers. And then at the end of today's training session, when I'm saying today training session, I'm mentioning the European market because the US market, it is still open. But remember that European market is the boss here, not the US market. So we have, again, European market opening for sellers on the euro. We were below the pivot point. We were below 1950. So all sellers went back. And it went all the way down to 119.05. And this is the US market right here. This bull candlestick is the US market. And it came and pushed the price towards the opening levels of the European market. So basically all buyers were back on the European market. Not exactly the price that it opened, but it was close enough. So now the question is, and at this point you should have the answer, how the market is actually at this point, how the market is closing on the euro today. How the market is closing on the euro dollar today with the information that you already have. Is it closing for sellers or is it closing for buyers? And for tomorrow, you know, what will be your strategy? For tomorrow, how you manage the strategy for tomorrow? What levels you consider buyer and what levels you consider sellers? So let's put into practice so far what you've been reading about market area, market intervals, market opening levels, and market closing levels. Because many people actually got mistakes today, trying to buy before they should, trying to sell at the lowest, trying to buy at the highest level today. So many things happening on the live training session today. Okay, so again, it opened for sellers in Europe, this European market activity, all the way down to 119, then towards the European market opening, the US opening for buyers. It took the market all the way up to the opening levels on the European market. And now we are actually below, and pay attention now, euro dollar is below the opening level of Europe, below the opening level of Europe, but above the opening level of the US. So if you had to say something, if you had to take a pick and you say, okay, well, then I'm gonna do what? Hold the buy strategy for tomorrow, or I'm gonna go for a sell strategy for tomorrow. What's your main strategy right now with the euro dollar, considering the levels that we have, considering the prices that we have? And I'll wait for your answers. What is it, the main strategy that you're going to keep on the euro dollar regarding the information that I just gave you? The opening, the closing, and the actual price activity. No one? Are you going to go for a buy strategy on these levels tomorrow or a sell strategy on this level tomorrow? It's black or white. There's no grays in here. Now, nobody want to try to guess. So if I have to consider the European activity, I'm going to say that the market is actually more into sellers than buyers, right? It's more into sellers than buyers. But I also have to consider that the market is really pushing towards the buyers above the 119. So the 119 is the reference. The 119 is my reference. Okay, so I'm going to say, okay, I can sell, I could sell below 119.20, then to 119.10 and 119. Yeah, I can say so, I'm going to go for sellers. That would be the first, the first hint that I will take because of the European activity. If the market opened here on Europe and it closed down here, it means Europe is not holding. Europe is not holding any buy transaction, right? But then if you see in the past, if you follow the price activity down here, between the 119 and 119.20, if you see here on the past activity, what do you see? Do you see activity on these levels that the euro is going, or do you see the market trying to push it higher, trying to push towards the buyer?
Hello, everyone.
You know? Yes, I don't know who's talking here, but we are listening.
Yes, it's me, Karen. I'm sorry I joined pretty late. It's Caleb. How you doing?
Good.
Yeah. So yeah, I just quickly sorry to cut you short, but the euro based on your explanation on based on the opening price before the European markets, maybe the first 2 hours of the European markets, what levels are we looking at in terms of the past activity, like in the past day or the past session? Like how far back are we going? Do we just go like the past 1 day, or we can go 2 days ago? You know, what puts a
it
limit on
doesn't
how?
matter. It doesn't matter. Of course, the closest
Hello,
days
sorry.
is the better. You know, the closest you go in the past, better for you because it's more representative.
Okay.
Because that's the real situation. If you had to go and see, okay, how far should I go? Well, the closest you go, the more real you get, because that's
Okay.
actually the market activity, right?
I see. Gotcha.
So as long as you have information, and I get asked that many times, how far you go in the past to actually know when to buy, when to sell. Well, you're gonna find yourself many times that you won't have any information on the past day, 2 days, a week, a month, or sometimes a year. And you need information just to go back 1 year, 2 years, 3 years, 5 years. Okay, so it's gonna happen. It's going to happen. All of us, we came to the point where we don't have recent information. We have to go back months and years sometimes. So, yeah, if I had to be honest, I'm gonna say, well, the closest, but sometimes you won't have, it's gonna happen. Some days you won't have such a close information. You have to go back a lot.
All right.
As long as you find information.
Thank you for that. Yeah.
As long as you have information.
You can continue. Yeah.
You know, you're gonna do fine. So another thing we have to consider here on the euro, again, the market is buying, you know. So I'm looking at the possibility to sell on euro dollar, but then I see that the market is actually holding the buy. It's holding buy levels on the euro between 119 and 119.20. So I wouldn't go for a sell. I will not go for a sell on euro dollar. No way. So if it goes down the euro dollar towards the 119, I'm going to wait for those buyers down there. Sometimes you're going to have sellers in the market, but not exactly being able to sell. And this is one of those situations. Euro dollar is going down. Yeah, can you sell? Maybe not, because you might get stuck with a sell transaction right at the buy levels, right at the buy prices. So it's just not a good idea to actually sell. You see? So that's one of the main things you have to really keep in mind. Many times the market is going to close for sellers, but you're not able to sell. You rather wait for the buyer at whatever price it is. So what's important for you is to understand the market intervals that it's actually compounding the euro. So we got 119, 119.20, 119.30, 119.40, 119.50. That's the full market interval that we're talking about, the full market range on the euro. How are you going to move around the market range on euro dollar? How are you going to use it? How are you going to move it around it? That's a different situation. And one thing I can tell you right now, you don't want to get stuck with a sell on euro dollar between 119 and 119.20. Many times are going to happen that we have to let go of a few, you know, buyers and sellers before we can actually jump in the market. Okay. And that's what I see on the euro dollar right now, that it might go down, but we cannot do anything with this. We cannot do anything with this.
Karina, real quick, if you don't mind, me asking a question. the concept when it comes to the market intervals and the market range. By the way, I've been reading the book. It's absolutely amazing. I've never really seen such amount of information in terms of the specific market prices. I've never seen that much in a book, to be honest. It's really, really eye-opening. Regarding the theory, or more like the practical, as applied to the market ranges and the market intervals, I do assume that because we looked at the Euro USD a lot, but I do assume this concept can be applied to every currency pair.
Yeah, every instrument has its own offer and demand and price equilibrium and buyers and sellers. You know, all the market has the information. I might use indistinctively intervals and range. I might use the same term for different things. But if you want to keep that clear, market range is the entire range of the market. Inside the range, you have intervals that are compounding the market, the full range. So for example, euro dollar, we got 119 and 119.50 in a buy day, right? So that's a full range. Inside the range, we use it, we scalp it out. We scalp it out until it's completed. What happened with euro dollar today, for example, it was completed, you know, pretty much both sides, like the sellers below 119.50 down to 119, and now the buyers from 119 towards 119.50. So we are in the middle now. That's what I'm saying. I will not go for the seller on euro dollar. I will wait for the buyer.
I see. All right. So why I asked this question is pretty much looking at last week, because you know personally, I do I apply a lot of time and I would say the maximal amount of concentration on the dollar Japanese yen. I absolutely love the currency pair. So last week we had an activity where in the last session I remember asking a question where we sort of looked at the chart quickly and we saw the yearly highs, if you can remember, in our last session. We looked at the yearly highs where we spotted it, and essentially you said that those highs are going to be very, very important because a lot of price activity is going to happen either above or below those ranges. So I don't know if we could just quickly look at the price activity, because what happened last week is we went above those highs, but I discovered that price did trap a lot of buyers. You know, so what would have helped, or in a manner of speaking, what would have suggested beforehand that there were a lot of sellers at that level and they were trying to eat the buyers? Yes.
Let's keep in mind that we are shorting the dollar. You know, we're shorting the dollar since the beginning of the year. You know, because of the policy, the Federal Reserve, they're putting a lot of money in the market. They have a dovish monetary policy. So the dollar, there's no way we're going to bet into a long year. It's not a long year for the dollar. It's not.
Of course.
So every time we see a buy opportunity on the dollar Canadian, the dollar yen, the dollar Swiss franc, whatever, we must have that in our subconscious mind telling us, be careful. Because we're not going long for the long run on the dollar. We're going for we're shorting the dollar. So every time I see a high, a monthly high, a year high, or even a weekly high on dollar Swiss franc, dollar Canadian, and dollar yen, I'm sure market is coming into a profit-taking situation.
All right.
So you don't go long for the dollar. You don't get stuck.
Yeah. So last week, you know, because the reason why I'm drawing like this contrast and comparison between the yearly highs being taken out and last week's activity, because we had a lot of liquidity flow into the market. And I think around 3 p.m. or 4 p.m. my time, which is the open of the US markets, we saw a sudden volatility that took the market bearish, basically taking profits off the market. But when we looked at the market areas, because that's sort of a very important subject we've looked at for the past 3 weeks, where we discuss the highs of March and the lows of March and how the first 15 days of the activities in March determine most of the year. And in June, July, we have a lot of corrections, bringing the price sometimes back to about a 50% retracement or more. We can't really foretell what's going to happen, but we just expect those corrections. Now, when we looked at UJ in particular, we saw the market area shift into the bullish region. you know,
Not really.
even
I mean, okay, well, Fridays will not change anything in the market. So whatever
yeah,
happens on Friday at last minute means nothing, you know, and many people ask that. What happened on
mm,
Friday? What happened on Friday? You know, at last minute, everyone was jumping on the dollar and getting out of the pound and the euro. I said
mm,
nothing. Just don't worry about Fridays. It's gonna get
sure,
back by Monday.
sure,
Okay.
sure.
Um, but yes, I mean, with again, everything based on dollar, be careful on the highs. You don't want to get stuck with a buy on dollar yen, dollar Canadian dollar, or on dollar Swiss franc.
Gotcha.
We're not long on the dollar. If we
Mm,
buy, it must be very precise, uh, you know, and it's not a hedge. That's also very important for you guys.
yeah.
We don't hedge. Ideally, we don't hedge any buy trade based on the dollar. If it
Oh,
pulls
okay.
down, we cancel. If it pulls down, we cancel. So you enter and then pulls back. You cancel
Mm,
that one.
gotcha.
If you can have a sale, whatever price it is, it's gonna get back to that. Yes, sellers are
Sure,
okay.
sure, sure.
Buyers,
Yeah.
not okay.
Yeah, what I think was a bit so I won't say complicated for me because I spent time studying UJ and studying the market areas as well last week. I spent a whole lot of time doing that, and it did open my mind to a lot of market manipulation and understanding how the decisions in March control the whole year. You know, but I discovered while doing this breakdown on the dollar Japanese yen that it wasn't a buy pressure area, and the fundamental side of the markets suggests a bearish dollar, you know. So how do we sort of correlate the balance between these two? Because if you go to the dollar Canadian, we're also experiencing a lot of sell pressure. However, we had
Right.
huge market corrections
Yeah.
as well.
Yeah. Well, correlations are not used. You know, it's like that's an old saying that correlations are not to be used on this complexity of markets today. We don't use correlations. We don't use correlations anymore. Correlations are not to be used. So you can be selling dollar yen one day, but buying the dollar Canadian. You can be buying dollar Canadian, selling dollar yen. So
All
we
right.
don't really count on the correlations, but it's
All right.
supposed to have sort of, yeah, we're talking about the dollar at the end of the day,
Yes, yes,
you
yes,
know,
yes,
but it's not something that you buy one and you can buy all of them based on the dollar.
yes.
Sometimes has you know, no that behavior.
So the market areas gives us just a general idea and a perspective to have in mind while we go through the intraday activity. In
Yeah,
summary,
I'm looking at the dollar yen right now, and we are at exactly, let's see, this is March, and it went all the way up. Yeah, we are at the end of March highs with the dollar yen. So the 111, below
yes,
111,
yes,
those highs of
yes.
March.
Those are the highs of March.
Exactly. So I'm going to say that all sellers are coming, but it should be very careful too, because we're still above the 110.
Mm,
So many times it's like, you can rely on price action, but also I see those highs on the 111 were very close, very
mm,
close.
very close. Yeah.
So we got, yeah. So if I had to consider something now on dollar yen, I'm gonna say I'm gonna wait for the sellers, and
So
and I'm gonna wait for the sellers. Well, I'm gonna sell below the 110.50 down to 110.40, 110.30. And I'm going to be careful here because buyers are going to be waiting between 110.30 and the 110.20. If no
gotcha.
buyers here, I'm going to keep
Yeah.
shorting down. Let's see down to where 110.20 is here. Yeah, buyers are going to be waiting.
Yeah.
See?
So within these intervals, this market, I think the full market range will be 110 to 110.50. And within these intervals, we should expect sellers. We should at least wait for the sellers.
Yes, yes. We should wait for the sellers on dollar yen. Absolutely, 100%.
All right.
100%.
Gotcha. Gotcha.
Again, we are at the highs of the end of March situation, and the
Yes.
buyers is holding. The buyers is holding on.
They're
the
holding. Yeah, they
They
are.
are
They
holding.
are.
That's for sure.
They are.
But again, you wait for the right level. You don't
Mm,
move before the market does. You move with the market. So even if you kind of see and understand that it can go down, you're not basing your strategy what you
mm,
think. You're basing your strategy on what you see. So if I see the 110.50, then I'm going to start selling, yes. But very careful, because I'm sitting above the 110 and I know buyers are very strong here. And then I know where the buyers, well, I don't know if you can see the buyer waiting dollar yen. They're actually waiting around here at the 110.20 and the 110.10. They're waiting here.
Yeah.
Buyers, 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 sellers, 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 and then buyers and buyers and buyers. So I see the buyer getting really interested into the 110.20 and 110.10. So I wouldn't actually trade on that transition. That's the area that you don't want to trade inside the transition, right?
Yeah, and I think there are absolutely a lot of buyers at the 109 as well, 82.
Yes, a lot of buyers are going to wait for dollar yen on this transition. So remember that the market has three different momentums, I'm going to say. The positioning, when they actually buy and hold, the take profit levels, when they actually get a profit out of the market, and also transitions. Transitions are the most dangerous ones.
I see.
Transitions is when it can go down, but also can go up.
Yeah, a hard place in the market. I think experience has taught me over the years, over the last 6 to 7 years, that in transitions, those are the stages where they get a lot of liquidity by ranges, by accumulation of contracts, market orders, and then they eventually choose a direction. But if you get stuck in the bad trade during the transition, it's a nightmare. It is an absolute nightmare.
So, and let's continue the example here for dollar yen. So if I'm close to the 110.90 and 111, I want to say, oh, this is the level for take profit. This is the take profit level. Yes. So you don't buy anymore and you wait for the seller. Okay. So that's the take profit. Then the positioning is the 110 and the 109.80. 109.80, 109.90, and 110. That's the positioning, right? So all the buyers are jumping in on those levels. Yes. And then you got the transition between the 110.40 and 110, I'm going to say 110.40, 110.30. So it can, from that point, going after the 111 again, or from that point, it can drop down to 109.90 and 110.
Gotcha.
Transition, right? So transitions are really important to recognize.
Okay.
Because you can have a good trade there, or you can have a very bad trade on transition.
Yeah, gotcha.
Okay. But those
sorry to interrupt. What's the difference between the pivot and transition? The main difference?
Well, the pivot has nothing to do with the transition, actually. Pivots are just a formula that is going to help you to understand the market activity from one day to another. But the transition is information that you have through many days and weeks, maybe months, you know. So there's not such a thing as a relationship between the pivots and the transitions, and I don't think that is going to.
So the transition is more important than the pivot.
Yeah. Pivot again is like indicator, you know, it's like indicators. It won't indicate you anything. You have to be very clear. We have to be very clear with that. Indicators are not going to set up any entry strategy for you. That has to do it yourself.
You just read the past.
That has to do yourself. At this point, what information do I have from the pivot on dollar yen? Well, I think that the market is giving me all the central pivot points above me, you know, so I don't know if you can see them. I got pivot point here, the central ones. Just focus on the central pivot points. Forget about all of them, the other ones, the green one, the red ones. Central pivot point, central pivot point, central pivot point. So I have them all above my market level, my market price at this point, right?
Yeah.
So if I want to sell, I want to be safe, yeah. But what other information do I have here from the dollar yen? I have a very important price around here. Very important price, the 110.50. Okay. So I'm gonna say, okay, the buyer is gonna try to push it from the 110.50. Okay, great. But I'm gonna go for the seller anyway. So I'm gonna wait tomorrow to sell below the 110.50. Tomorrow I'm gonna sell below 110.50 on the dollar yen. And what else? What other pivot points do I have? Well, I have one here that is telling me pretty much nothing. And then I have another down here, which is fine, and that's it. So I can see that we are on the seller side of the market right now. Like all the buyer is actually, it's above us, all the buyer. Okay. But every time the market touches a psychological price, they will try to do something there.
Yes.
So if I'm in a sell strategy and it reaches the psychological level, they're going to try to buy. If I'm in a buy strategy, I'm reaching a psychological price, they're going to take profits.
Mm-hmm.
Good.
Okay. Transitions are not that easy to identify because it's not something that is telling you exactly where are they, you know, where the transitions are. On the book, I mentioned many transitions to be careful with.
Yes, yes, yes.
But they're not all of them. They're not all of them. And I'm sure that in the future, you're going to be facing transitions and you must be careful. As long as you keep in mind that your main strategy is what's important for you, you're going to be safe. You know?
Mm.
So the dollar shorting, and if I have a buy, I got to be careful. You know? Same for the euro dollar. We're buying the euro, we're buying the pound. If we are going to sell, we have to be careful. In fact, we moved the sell on the pound like 2 times already. We have still pending. You know?
So let me ask you about today, the euro dollar.
Yeah.
So have you bought it or sold it today?
We have buys. We have buys on the euro. Yes, we have buys on the euro.
Because it made quite a big move today, but both ways.
On both markets, yeah, on both markets, it actually moved a lot. So we have here, again, all the sellers on the European market, then all the buyers on the US market. But this is the key. This is the key, you know. Did the market close at the level that it opened or it closed below it? If you can only read that information, you won't have any problem. Well, it closed below it. It closed below it how it opened. And yet, are we selling? No, we're not. Why? Because I see buyers all over here. I see buyers all over here on the euro dollar. The market is really buying between the 119 and 119.20. And you may say, well, why I cannot sell from 119.20 down to 119? Great, yeah, you can do that. But what if it's not reaching the 119? You're gonna get stuck with the sell on euro dollar and it's not gonna go for 119 again. And it's gonna go up. This is the 119 down here. See? In fact, not even reached the 119. It went only down to 119.04 or 3. Okay. Now, if you get too confused sometimes and you cannot really understand some levels because it may happen to you at first, just go for the next psychological price. And that will be here, 119.50. So that's why I have this line right here. I have a very strong buy stop getting ready, 119.50, and I'm gonna close it around 119.60. Since I might not understand these levels because I see the market buying, not getting through, going down, buying, not getting through, going down. So the 1940s is acting as maybe a very important resistance situation there. So I'm not going to take any buy at the 119.40. I'm going to wait for 119.50. Here is going to gain pressure, buy pressure. I'm going to reach my target and maybe even more. See? Maybe up to here, the 119.70. Again, don't get confused with all of this.
Just by experience.
So what?
All this that you read there is just by experience.
I couldn't.
You gain that knowledge by experience, for example.
Yes. So sometimes
I wouldn't be able to judge you like you do.
Right. But again, just forget about the chart. Just focus on the map prices on the book. You know, the book has it all. And I don't put it like a tons of charts, actually. In fact, if this was for me, I wouldn't put any chart on the book. Because the idea is like you get free from the charts, free yourself from all of that and focus on prices. So you have to be able to read the prices and knowing, understanding what level you are there and what level to wait for. So let's give an example here. We got the map price again. Map price of the euro dollar. So you know we are on the 119 and above us is the 119.50. This is the full market market range, right?
Range.
Exactly. And inside, you have to be able to manage it precisely and not getting stuck with the wrong trade here and with the wrong trade here. Because I'm sure today people were selling at the 119. You know, so we know that 119 is the level that market is actually buying. And now we know that 119.20 is fine, the 119.30 is fine, the 119.40 is not fine. You don't want to buy here. Not buying. Because it's not pushing towards the target. It's not really not doing it.
Yeah, yeah.
So 119.50, then yes, the buy pressure is going to increase. The buy pressure will increase. And now we're gonna go for the 119.70 slash extensions. You know, I can see also 119.80.
Yeah.
And then after, what happens is going to happen here, maybe two ways, maybe two possible scenarios. The market is either going to push it again towards the 120. So we're talking 120 from these highs, or we're talking profit taking situation down to these levels again, down to 190.
Yeah.
So again, I'm not checking anything on the chart, no candlestick, no nothing. And I said, I'm fine here, I'm fine here, I'm not okay here. I don't want to have any buy here. I'm going to wait for the next price. I know my targets. And from this point on, I know I have two ways to go, either buy again towards the 120 or to sell down to 119.
Karina, I've got two questions. I'm going to use the euro dollar for the first question. We saw a bit of a bearish move, just pretty close to the end of the day, and a sudden bullish move, and then the market ended up closing bearish below the open price of the day. There is this occurrence over the European session and the New York session, where and I've experienced it so many years without really having any valid reason for it. So I don't know if you have an idea as to why the New York markets consecutively, maybe 3 out of 5 times in a week, consecutively reverses the European market. So if the European market goes bullish, the New York market goes bearish. You know, it happens over and over again. So
right.
Why is that the case?
Yeah, don't try not to make that as a rule, because it's not a rule.
Yeah,
no,
yeah.
It doesn't mean that the market on Europe is going to go up and then US is going to go down, or the opposite. Because we all try to make golden rules. We all try to have this figured out like that, and it's not such a thing. But of course, yeah, I saw the dollar yen going all the way up, and it touched the 110.95, and then all the way down, and it closed for sellers. So what you have to care about is that, okay, it closed below the market opening. So European opening here, US opening here, and we are below. The market is not holding the dollar today on the dollar yen. And there's no buyers. There's really no buyers, you know. So even if the market is actually holding at 110.50, you're not gonna buy. You're not gonna buy here. What you're gonna do, you're gonna sell below 110.40, and I'm talking about tomorrow, down to target 110.30, an extension possible down to 110.20. You're gonna be careful here, because this is a very important transition, that it can take you up to the 111, close to the 111, or it can take you down to the 110 slash 109.80. I'm gonna go for seller. I'm gonna go for the seller tomorrow. I'm gonna go for the seller.
So pretty much there's no really specific reason why this occurrences happens like 70% of the time in the market. Is just market habit and market fluidity basically. There's no specific reason as to why it happens.
Yeah,
You know.
it's not something that we can actually know exactly, why it's open for sellers and then buyers do the
Gotcha.
market or the opposite.
Gotcha. Gotcha.
Not really,
Gotcha.
not really, but yeah.
All right. To my second question, it's something you sort of discussed with us in I think in our second session. I think the second session or the third session. I really can't remember. But we were discussing what happens when, because we studied the market ranges and how they work and levels within the ranges where we see intervals where we scalp with and how that works in the market as well. But we said that there are explicit cases where within the day, because yeah, it happens rarely that the market covers a full range in a day. Like you said in one of our lectures, it is very rare it happens, but sometimes it does happen. And you said, for an example, I'm just going to use the Euro USD that we talked about just now, where we talked about the 110.50 to the 110.000. And we said that's like the full market range, and we discussed the intervals of 110.10, 110.20, 110.40, 110.30, and all that. But there are cases where the market extends, the extension moves that we talk about be above the 110.50, for instance. And you said that there are certain confirmations we have to look for because we see this extension moves as very dangerous prices to get stuck in.
Yes,
but
extensions are very dangerous. Extensions are very dangerous. Very dangerous. Like you don't want to get stuck on it. For example, here on the dollar yen, you want to sell only down to the 109.80, and even it's going down to 109.70, which is the extension. You don't want to take another sale only to do those 10 pips. You don't want to do that. Those 10 pips, let them go. Many times extensions are known to take any moves, you see.
I see. No matter how strong they may look, we don't look for.
Yes.
Yeah.
And that's the key there is your emotions control. You have to be very focused and very under emotional control, because your mind is going to say, oh, it's going to go down to 110, I'm going to sell again, I'm missing the next sale transaction. It doesn't matter. It doesn't matter. Even if you miss 30 pips, 40 pips, whatever, you stick to the strategy. You don't change it. Once you close it, you're done. That was your target. If you did not wait for the extension, you're not going to sell again. You're going to have many stops at that moment.
Yeah, very true, 100%. I agree with you 100%. So in a situation where the day just began, basically, let's just say from because on my time zone, my market hours would begin around the Tokyo markets in the morning. So let's just assume there's a scenario where the market starts and really there hasn't been much of price action in the day to even read the charts or analyze the data. All we are going off of is our market range, our market areas, our market intervals. This is all we're going off of, and also our equilibrium prices. And then we see suddenly at the beginning of the day that the market has extended maybe around like 110.50. Does it mean that throughout that entire day we're not going to have any orders in the market, or are there certain confirmations that we should wait for where we begin to enter market orders after the extensions?
Yeah, the same that I said before. For example, here on dollar yen, between the 110.90 and the 111, I don't care how far it's going to go. I don't care if I have the confirmation even to actually do this buy. You see, you get the confirmation about the 110.90, and that's going to take you to the target to 111. I don't care that confirmation. I'm not going to go for that buy. And I don't care how many times I see the 111 on dollar yen. I will not go for that buy.
Gotcha.
But yeah, this is one example of when not to take some certain levels and when to take them. You're in a take profit levels. You don't want
yeah.
And you saw the confirmation like so many times, because now you understand price action and you got the power. Because knowledge is power, and you got the power. And it's going to reach the 111. But the self-control it's going to make you stronger, and you're going to gain more confidence because you're going to see the confirmation, see 111, 111, and you're not going to take it. And that's going to make you more confident. Trust me. It's a great exercise. When you see confirmations, you know the target, and you don't take the trade.
Yeah.
It feels great. And after a while, you exercise that, and you gain so much confidence.
I gotcha.
So much confidence.
Yeah, that's powerful.
So how do you say it feels great in Spanish?
So what?
You started it.
Yeah, because I've been there. I've been in that situation, you know, like, oh, I knew it. Why did you not take it? Why did not take that one? I knew it. And then I realized that I was actually gaining confidence, and I don't have to take everything. I just go for what is safe.
True.
Because at the end of the day, end of the month, I had to pay my bills, and I also need money to invest and stuff. So just whatever. I can't take everything, and I don't have to.
True.
So, and the same is going to happen here for the euro dollar. I'm going to have the confirmation to buy about the 119.40 many times, but I know I cannot trust the 111.40. I'm just going to have a very nice buy stop at the 119.50. And again, I got always first target first, 119.60, 119.70, which is my last target. And I know what to expect also. Like I see the market may try to pull down from the 119.56, you know, because I see that, but I shouldn't be worried about it. Like if I'm in the buyer's side on the euro, I'm gonna be fine. If I'm on the seller's side on dollar yen, dollar Canadian, dollar Swiss franc, I'm gonna be fine. I'm gonna be fine with those. Okay.
So on the euro dollar right now, above the 150, that is not an extension. That's not an extension move.
The 119.50 is supposed to be the beginning of the 120.
Oh, okay, I see.
Yeah. So there we're supposed to have position market getting in, not out. They're gonna get out here at 119.70, 119.70, 119.75. And why you know that? Because well, it happened already.
Yes.
They're taking the profit. This is a take profit level. This is a positioning level down here.
So do you think it's going to go above 120 or 124?
What was that?
The euro USD, do you think it's still going to reach like 120, 124?
I believe so, yeah. 120, 121 probably. Yeah, we're supposed to go towards there, towards here. Yes. Yes. I don't know like when, I don't know how, because we are way too below that, but we're supposed to go towards those levels, yeah. And they're actually, they're not doing anything, but they're supposed to actually now making some statement. They're supposed to be saying that they want to do something with the rates, and they're not doing any. So I don't know. We had non-farm payrolls this week. On Thursday, we had the PMI of the US production. And then the NFP is expected a good number. So the dollar should have some, some news on Friday. But we can't really say much about it. You know, what if there's bad numbers on employment, bad number of production,
Yeah,
so it's like,
that's gonna be bad for the dollar.
And that's the problem of forecasts. When the forecasts are so good and the results is bad,
yeah.
That's not
good. It's contrary to the market. That's how it works.
Yeah, it's gonna crash big time.
Sometimes it doesn't respect that. It's like you get bad news.
Exactly. Yes.
You expect it to fall. Everybody jumps in, and then everybody loses because it doesn't do anything according to that. And you see a lot of comments, oh, market manipulation, or is this.
Yeah.
The market 100% follows price action, not the news. I think the news fundamentals are just like an excuse for where price is going to go. So if it ends up going up, we're going to say, oh, it's because of the news. But I think if you follow price action, you would always be very close to price. So it's hard to really get deceived, You would sort of see it coming before it comes. The news can always be deceiving. The news can be in any direction, to be honest. I think price action is the only thing you can trust in the markets. Is the
Yeah,
only
you
thing.
can say that the market is discounting the impact, so it's good for the US, but the dollar goes down because they
Yeah,
knew also they bought before and they take the profits.
true, absolutely.
Yeah, you can see
Absolutely.
that. But yeah, it's totally true. And I don't understand because there's still many traders that they trade with news, waiting for the result to trade. And I was like, what is that? But again, it's yeah, you have to read prices, and that's all that is. So for tomorrow, again, this is the euro, and we're gonna actually go for the buyer and forget about this price right here. We're gonna get them from 1950 all the way up to 1970, maybe with an extension. Here we're gonna take profits. And if it goes down tomorrow, we are not going to sell. We're gonna wait for the buyers at the 119, like around here. 119/119.10. So that's the strategies for tomorrow. Buying here, nothing here, transition, and or buying here. And if it goes down again. And then for the pound dollar, we actually gonna go for the buyers above the 130, I'm gonna say 139. We have to forget about all of this. We're gonna jump in from 139.
It
139.
might be a little bit of a wait for that.
A what? Yeah, yes. A lot of waiting, yeah. One central pivot point here, one central pivot point here. Is really not much we can do about this. But if it gets through those central pivot points, then yes, buyers are on. The target is 139.20 and 139.30. With dollar yen, we're planning on the sellers. Being careful here, which the market is going to try to buy. If they don't buy,
If I just may ask you, what is it that you use for charting and writing on your screen?
this is a Wacom. It's called. It's like a pad Wacom, and it's a pencil, like an optic pencil, and you can write. That's the name of the pad.
Oh, okay, but it's not. No, I was thinking like a chart, or it doesn't have anything to do with the chart.
What do you mean?
That's MetaTrader, isn't it?
Yeah, it is. It is. Oh, you were talking about yeah, MetaTrader. Yeah, I mean you can add stuff, I guess, but I'd rather just have only the chart. Sometimes I check the spread, but not really. So I rather, when I explain, I like to have it like this. So then we have the dollar Canadian. This is MT4, yeah, MT4, which we are gonna sell below the 23.20 and the 23, whatever 23 we got, we're gonna sell. All sellers are coming on dollar Canadian, but today it closed for buyers. So
that's also heavily impacted by the oil industry.
So below 23.30 down to 123, and that's it, because here the market's going to try to buy again. And if the market, if they're not buying at 123, we want to sell below it.
So that's a waiting again for that level to go down.
Yes, yes. Below 23, we keep shorting down to 22.85. Extension 22.70. Down here. Why? Because the market here is waiting for the buyer. Buyers and buyers. If no buyers at 22.70, we sell down to 22.52, like here. More buyers here. And again, the market closed for buyers today. Yes. Are we changing the strategy? No, we're not. We're below 24, 23.50, so we should not considering buyers. If tomorrow the market open for buyers, we also have ready buyers with the buy stops here, 23.50 up to 23.70. So it doesn't matter how well you know price action, it matters how well you're prepared for the opening market hours. So we get ready here for buyer, and we get ready down here for sellers. We be careful here on the take profit situations, not to get stuck with another sale. Let them go a few sellers here, let go a few sellers here, and then wait and see what happens. Commodities are like nothing at all. Like There's flat. I don't even know why.
Yeah, it
But
is.
the main strategy for commodities, we're still into the buy. Still into the buy. Eventually, it's going to get out from 26. Eventually, gold's going to get out from the 1980, 1985. And we're now focusing on sales strategy, focusing on buy strategy, but it's not the moment for commodities, you know.
Yeah, there was a time, I mean, there was a year where I traded commodities so much, but I haven't even touched them this year. To
True,
be honest, I haven't. I don't know. It's just not that year, I guess.
true,
I haven't
true.
touched them. True.
It was a buy year since the pandemic started. It
Yeah,
was
exactly,
buy.
exactly. Yeah. So every pandemic news, it was great for commodities. And now,
Yeah.
since the market is starting to open it up again, many countries are free from the, you know, from the virus. Then commodities are kind of like, why? You know, they're trying to invest again. They want to push the money again. They want to get the money out of their their safe, you know, investments, and that moves commodities, moves the FX market, not commodities.
Yeah.
So hopefully we're in that cycle now, but that the central banks are trying to move the rates. And if that happens, then people's gonna start saving again, spending less, making maybe some safer investments. But so far we don't have that.
So what happened when does that when in that situation, for example, what happens with the dollar?
What happened with what? Well, that's what happened. The announcement for the rates on July 17th. They said that they're gonna move the rates before they should, before they say it on the 2023. So when that happens, it means the money is gonna get out of the market. People's gonna start saving because they get better rates. The expense, the expenses are gonna get higher. I mean, the cost of spending is gonna get higher, and that changed everything. That changed the game completely. It's gonna change the game completely. Until then, we still have the rules of shorting the dollar and buying the pound, buying the euro. Okay. And
Yes, but
honestly, this year, I don't think we're gonna have more announcements. If the Fed already say that, that's it. You know, that's it. And now is when we had to wait for December. So after the first semester, everything gets kind of more quiet. No, I don't know if quiet is the word to say, but more relaxed and more.
Yeah, more normal. More normal.
Yeah, more predictable, I guess. Lagarde, she's not saying anything about rates. No more announcements. No more stimulus packages. Not for that. Yeah, so it's the right moment. It's a good moment. The first semester I was like, okay, what's gonna happen this year? Because they know.
well, we get into the holiday months also.
On the what?
Holidays, like August sort of thing. It's July, August is kind of holiday time.
Yeah. August, also November. Thanksgiving, we have those dates are fine. Yeah, those days are fine. But again, this volatility, but again, what's going to change the game, what changes the game on the currency market is the monetary policy. That's what changes the game. So you have to make sure that you understand that the rules of the monetary policy. That changes the game. So they can't really say one day to another, we're going to increase the rate and you're going to keep shorting the dollar. No. If they're saying they're going to increase the rate, whenever they do it, not when they say they're going to do it, whenever they do it, that changes the game completely. Of course, when they say they're going to do it, it also gives us volatility. But
they might do it. They might not do it.
You know. But yeah, what happened on Friday, last Friday, it was iconic because I knew many people are gonna say, "Oh, this is turning around. What's gonna happen?"
It was iconic. It was. It really was. Yeah.
And I think I did a Instagram live on Spanish, and I said, "Fridays don't change the game on the market.
True.
Fridays
True.
don't change the game." And that was institutional moves That was the banks taking profits and putting to the dollar on the last minute.
That's why I rarely look at the markets on Fridays. Rarely. I do it sometimes, but not often. You know, because it doesn't really affect anything in the market. The next week, the market just starts like normal, like nothing happened on Friday.
Yeah.
Yeah.
Yeah. What changes everything is the opening hours on Monday, opening hours
Yeah.
today.
In fact, I think the first 8 hours on Monday determine a lot in the market. The first 8 hours. In my experience, I've seen a lot of tangibility in those hours. If you can read those hours well, I think you're even good for the whole week. You know.
Exactly. Okay, so we're gonna talk about price identification next Monday and Japanese candles. But Japanese candles is just the basic theory, you know, just the opening and closing. But we're gonna do some exercises to identify when do we have a confirmation, when do we don't have a confirmation. In fact, we can do the first exercise now. So we all know how the candlesticks are being composed, right? We know when it opens and when it closes, right?
Yes, we do.
Great. So let's grab the last 15 minutes here on the euro dollar and let's see what information is giving us. So I'm grabbing this candlestick right here. And what we're gonna do, we're gonna measure the closing price. And it says 119.27. 119.27. What type of price is that? And what is closer to what? To what level? What would be the strategy if I got the closing of 1927? What price is that? Is that good enough to buy? Is it good enough to sell? What should I do?
Wait for 1930 and then buy.
Yes. Wait for 1930 and then you buy. Yes. Exactly that. What will be the target for the euro dollar if you buy at 119.30?
119.40 or just 119.39?
Exactly. Yeah, 119.40. But then I see that it's kind of getting exhausting around here. I might close it before 119.38 maybe, you know, just to make sure.
Yeah, that's what I meant.
Exactly. That's right. That's all there is to it. You wait for the right level, right confirmation. You don't have enough confirmation here. You wait for the next candlestick. But you know, okay, whenever it touches the 119.30, I'm gonna jump and buy. Do I need the confirmation for this? Maybe not. Do I need the confirmation to buy down here at 119? Maybe yes, because we have all these sellers. So you don't want to just buy because it's dropping and reaching the 119. You may wait for the confirmation. In fact, you don't want to wait and buy 119. You want to buy 119.10 probably.
So let's see if I got this right, for example, like the candle that you chose as an example. So that gives us the indication that the market is going up, but we wait to our target price or the interval price and we buy it there because it could go both ways. If it doesn't reach that psychological level or interval price, it might just go down as well. Is that correct?
Yeah, I wouldn't be worried about it. I mean, if it's going to reach the 119.40 or close enough, even if it goes down a little bit, I might hold the buy. So I don't see this happening from here. This is what you're opening today. But most likely, you know, might reach the 119.40. It's going to go down a little bit, but then you can buy again at the same price, 119.30. Again to 119.40, and then probably 119.50.
Yeah, that's more like scalping. Yeah.
Exactly.
Yeah.
Let's grab another example. How about the dollar yen right now? We have the closing. Well, there's not much going on, but we can do something with this as well. Okay, so I know the market closed for sellers today. The question is, regarding the 15 minutes closing just now, I got 110.54, 110.53, 110.55, 110.50, 110.54. What prices? What prices are here? What do I have?
If it goes below 150, we short it.
Exactly.
If we wait for that, well, that's what I would do.
Very important here. So if you touch the 110.50 and then you sell, what if you have again this type of situation of the closing 110.54, 110.55? What happens if you have this and it's just you saw here, but then you get this. Are you gonna hedge a sell here? Are you gonna hedge it, or you're gonna cancel?
Depends on what kind of market we are. What
I'll cancel. I'll eventually cancel.
If you sell and you move at it was an advanced move, and you got to sell at 110.50, and then you got to sell here, and it's not reaching the target, and you waited 20 minutes, 25 minutes, 30 minutes. You're not gonna hedge that. You're not gonna
No.
hedge this transaction.
No, not at all.
It's most likely it's gonna reach again the high.
Yeah.
So whenever you're very close to psychological levels, sometimes it's just better to let go a few pips before you jump in. So I'm not gonna sell at 110.50. I'm gonna sell 110.40, then to 110.30. I catch those pips right here. I wait for the transition here to see what happened. That's it. That's all I'm gonna do. I won't sell here. It's dangerous. I'm gonna take the next sell situation.
So, you know what I meant to ask you, for example, because we like the way I understood you or looked at it when you give us this example, I said I will sell below 110.50. But that below means for me, it should go below maybe at least to 110.48. Is that the way to look at it?
Yeah, you can do that. Yeah, you can wait for that 110.48. But it's the same situation. Let's say that you sell at 110.48, 49, but then it might touch your sell price and then pull back again. So you gotta be very careful here.
Yeah.
Again, just give it a 10 pips. Give it 10 pips to it.
10
Don't
pips,
jump
yeah.
in right away. Because again, you're gonna be really happy because you're gonna see the confirmation below the 110.50, and then it's not gonna lose the confirmation. You're gonna wait, and then you're gonna have to hedge, and then after the hedge, you're gonna see 111. It's a mess, you know.
I've seen that happen like a million times.
Yes.
It's crazy.
Some trade you want hedge, some trade you're not gonna hedge. Hedging is a great tool, but you had to use it carefully because it can also play it against you. It can also play it against you. So if you know what you're doing, if you're moving towards the sellers, touching a psychological level, just let go of your sellers because you know you got it right. You waited the confirmation. You know what you're doing. Everything's fine. But then it's doing this and this again. This, whatever. Just I'm not gonna mess around here. I'm gonna wait for the next price. You know, it's gonna play you. It's gonna play you. I'm telling you, it's gonna play you. Price action, it can also play you.
Yeah.
Whenever you feel like an expert, it's like a badass, and then that's the worst moment.
Surprises you.
But generally, how many pips you use for a trade? How many pips you let it go?
That's a good question. Typically, I'm gonna let go 10 pips for sure if I'm close to a psychological level. And my targets, I can go for 15, but then I might close it before. I might close it at 8 or 10. I really had that's something that you have to decide on the way.
Yes,
You wait for the extension, you wait for the extension, you let it run, you don't let it run, you know. It's something that the experience is going to tell you when to hold it, when to cut it, you know.
So generally speaking, you work on like 10, 15 pips a trade?
Yeah, 10, 15, yeah. If it is high impact information, I go for 50, like Fed announcement, NFP. I know the NFP is not going to give me 20 or 15. It's going to give me 40. 30. Yeah, you know that. So whenever you see your target, just let it run. NFP, you let it run. Interest rate, you let it run. Your profits, I'm talking about. What else? Sometimes PMI, you let it run. And that's about it. You know, that's about it.
Yeah, the big
yeah, big data. Big data. GDP, no, that's all story. GDP, nothing's trading that as a high impact anymore. but FVP, inflation, sometimes rates, that's about it. It's not that many.
And I think in general, like when it comes to price action, I think that's one of the things you made mention of last week. It is a lot of work. Like you actually have to focus on the charts because every setup is unique. Every setup is very, very defined by what happens in the market. So some trades you might let it run 15 pips, and that's all right because you're monitoring the charts, you're watching it. Why some setups based on the price action after 15 minutes, you're done with the order. You just can't be in the market anymore. So there's a lot of attention when it comes to price because I think some people just feel like, okay, I'll do it this certain way. It's rule oriented, but price action has a lot to do with watching the market. You have to look at the reaction and then you react to what the market does. There's a lot of reaction to the action of the markets.
Yes, true. And also there's much of just don't focus on the wrong hours because that might confuse you.
Yeah.
So when you're looking at Asia and Asia's dropping the euro down, and it's like, oh, am I going to sell? I'm going to change the strategy. No, Asia was not going to move the euro. It could.
No.
But just wait for the opening of the European market, and then you see, and then you can change the strategy, you can hedge, whatever. But try that Asian market is really not changing anything for you because it shouldn't.
Yeah.
It shouldn't have an impact on anything. Many things can happen on Asian market, don't get me wrong, but also just if the big fishes are awake, you follow them. Asia is not moving the nothing on the market. So if you focus on the wrong hours, you may get really confused. So this is not a moment to watch anything because I might think, oh, the pound's gonna go down. Oh, the euro's gonna go down. I'm gonna sell, I'm gonna hedge, I'm gonna close my buy. No, doesn't matter what happened in the closing hour in the market. It matters what happened at the opening hours. If the opening hours tomorrow is gonna go down to 119 again with the euro, then that's it. We buy down here. But we're not gonna hedge the euro dollar tonight. It's gonna get activated, the sale, and we don't want to have that.
All right, Karina, in summary for today, I think some of the important things we discussed today is the prizes that make up the position, and three important prizes we get to look at in any currency pair or instrument that play a strong role, which are number one, the take profit areas, number two, the positioning areas, and the transition areas. Now I pretty much really understand the positioning areas, and I think I also got a hold of the take profit areas. But what really, just for the sake of clarity, what really makes up the transition areas? Because a lot of things happen in those areas, and they are distinctively very, very dangerous areas to get stuck with the wrong order. So what happens? What creates those areas? Because I have a tendency in my brain to think that it's the equilibrium prices, but that can change within the day.
Yeah, you got it right. Many times it's the equilibrium prices that gives you the transition. Because if you think about it, there's like an empty, like an empty level there, and the market agrees that that's the price that the currency should have, and they get stuck in there on the transition like for so long because they agree that's the price they should have, and that is actually a transition what it is. So equilibrium prices, yeah, you're gonna have equilibrium prices on transition areas many times because that's the whole idea. That's the whole idea.
So in general, if the markets, because we looked at the past 3 days in most cases, because we don't really have to go as far back, we also established that today. So we look at the past 3 days, and sometimes we see the market give us the equilibrium prices like above the current market close of the day. So in such case where the equilibrium prices are above the close of the day, we sort of have in our minds that that is sort of a selling day because the equilibrium prices are above. And if they're below, it's sort of going to be a buying day, just in general. Is that a right perception of the market?
I couldn't get your question.
All right. So for example, let's just say on Euro USD now, we have most of the equilibrium prices intraday above the close of the markets.
Right.
So can we say in general that there is sort of a lot of pressure to the sell side since it's the close of the market is below?
No. Not really, no. I mean, if we take the euro from the past few sessions, then we
Yes.
got, this is the pivot point today, and the price is down here.
Yes.
The pivot point, I'm sorry, today, this is the pivot.
Yes.
This is the new one, the new pivot point here. The
Yes.
market is closing below, yes, and then closing kind of like below this one, yes, and
Yes.
here as well. But no, many times it all closes above. It all closes above it.
Mm.
For example, I cannot take any from the euro, I guess. But many times it's just closing above it, not below it.
Mm.
Well, the euro's been playing on highs many times, you know, highs of 22, and now the highs of 20, the highs of 21.
Mm.
Because that was the correction of June, so we shouldn't take that as consideration, because now the market is gonna again trying to go up. You know, correction means going down, and then market is back to the buyer because correction is done. We have July starting now, and that's it. If the correction
I want to make sure I'm getting the premise of the equilibrium prices correctly. Is it that when we have an equilibrium price that there are and price moves above it, does it give us the notion that there are buyers above that price, and when it goes below it, that there are sellers below that price, or that when we go above it, there's buying pressure, when we go below it, there's selling pressure?
Yeah, you're talking the same thing. It's the same concept. Below the equilibrium price, the market goes down and the sell pressures increases.
Okay.
And above the equilibrium price, the market goes up and the buy pressures increases.
All right.
Now, if you're gonna take it as a trade because you see the market below the pivot, and then you're gonna sell or not, that's a different situation. Many times it's below the pivot, but you can sell. Many times it's above the pivot, but you cannot buy.
Yeah.
And that happens a lot.
All right.
You let go of a few trades.
So on a pair like Euro USD now, what establishes the transition level? Because we know the TP levels, the take profit levels, we clearly can see them from the price action. We can also see the positioning levels where we're going to enter our orders as well. So what makes up the transition levels on a pair like Euro USD, for instance?
Again, transitions level is that level that you know something's going to happen. It can happen both. It can happen the market really pushing for the buyer, waiting for the buyer, or taking profit out of the market.
I see.
There is subtle situation that the market is not moving so much, and you know something's going to happen, but we don't know exactly what's going to happen. And you must be careful with that sell or with the buy inside transitions. And if you're selling inside the transition, you might get the strategy wrong. So you should be waiting for the buyer. And if you're buying in transition area, you might get it wrong because you must be waiting for the seller. And it's very common that transitions are also equal to equilibrium levels, equilibrium prices, because that's the whole point. The market agrees that they should take the profit or they should buy. You know, so again, they agree that they should take the profits out or they should buy. That's why you have those empty spaces. It could be between 10 to 15 pips that those spaces are very dangerous as well. Because then it means a drawdown of 100, 120 pips the next day. And that's a fact.
Sure.
If you get it wrong, the transition, that's a fact that it's going to mean a drawdown the next day. Sure. Many transitions are written on the book. Many transitions are not written on the book. But you're going to, along the way with me on my live training sessions, I tell them every time, this is transition, we're not going to use it. This is a transition, we're not going to use it. So along the way, every trader they have their own notes, and well, this is a transition, we don't trade here. And with enough experience, you're going to start to identify yourself.
Yeah, definitely.
Okay, guys, so I would like to do more exercises next week, but just exercises, understanding price opening levels, identifying prices, transitions, and all of that. What do you think?
Oh, yeah. It's a great exercise, actually.
Yeah, let's do that next class. We're gonna start right away with exercises, identifying confirmations, take profits, transitions. We're gonna use dollar, yen, euro, and maybe the Canadian.
Yeah. I love the fact. I just got to say, I love the fact that dollar yen is in there. I just have to put that out there. I love the fact that we're gonna be looking at dollar yen.
Yeah. We're gonna use dollar yen.
I absolutely love looking at it. Yeah.
Alright.
It's like my baby.
Yeah, it's a fun prospect. I gotta say, it's very fun.
Yeah,
It's
it
a-
is. It is. It is.
I-
If you get it right.
Exactly. Because if you get it right, if not, you hate it so much. You hate it so much.
Yeah.
But it's also I've learned about a few years back when I made some mistakes. But anyway, dollar yen, for example, it's also good for beginning trade or beginner because it doesn't do much most of the time. It goes a little up, little down, little up, little down.
Yeah,
And if you kind of
depending
learn
on the
that,
year, depending on the year. This is a year that dollar yen is moving kind of tight on market ranges, but some years it's like crashing highs and highs and highs for 4 weeks in a row and lows and lows and lows. So this year, dollar yen is very stable, but it's not
Yeah.
always like that. Not always like that.
No, not at all. It's the same with the Euro Japanese yen. There was a time where I traded the Euro JPY, the Euro Japanese yen, for about 2 years, and in the space of those 2 years, there were days where it completed about 250 pip move in a day. You know, that year was so drastic. Like we had fast moves within the day, and then after 2 years, suddenly the pair just slowed down. I think it was 2017, 2018. And it became so slow that sometimes we barely could make 70 to 50 pips in a day, you know? So it does happen like that. Some pairs are like that. Some years are just their years and they move erratic. And then some years they are very slow. So this year, I think the dollar yen has been very decent. It's been very decent so far. We haven't had any scary moves within the day, but it can happen. I know the Japanese pairs too well, way too well. When they move fast, really fast and swiftly. Swift. They don't wait for anyone. You know, it's just 1 minute and that's it. You know, accounts are gone, absolutely shredded.
Yes.
You know, they're amazing though. I love the Japanese pairs.
100%.
I don't know. They just, for me, they're just the way I trade gold as well. They're just compatible. You know, I can I have this fluidity with them where I get involved in the way they move and sort of I can read them. You know, and I think that's an important thing for investors. You don't just even when it comes to stocks as well. You know, some people invest in stocks because they think it's a great opportunity, but there are people that invest in them because they actually have a longing or a drawing towards the companies that own these stocks. So when you really have sort of an idea or a passion for the stock, it's easy to invest because you would not just invest in it because of the popular opinion, but you do have a general longing. Like I have a friend of mine that is really interested in pharmaceuticals, and all he does is invest in pharmaceutical stocks. That's it, and he always gets it right. You think he has a magic pencil or something, you know, but he always gets it right. But he has a longing for it. He has a passion for it. So I think it's the same transcends to all markets, including the currency markets as well. I think when you have a passion for a pair, you sort of study it and you can read it like a book. You know, you sort of get acquainted with how it moves. You know, so it's easier. Yeah, it makes it a lot easier. You know, rather than trading everything.
Yes, true. After a while,
it's like you said, Karina, didn't you? At some point, you mentioned like it's better to start with maybe 1 or 2 pairs, get to know them, and then you move on.
True. All right, guys, are we cool for tomorrow? I mean, you got at least some strategy going on here. What I mentioned. So be careful with the Canadian though. We might have some buyers tomorrow, if not all sellers.
Yeah.
Pound, I'm not worried about it. Euro, I'm not worried about it. And dollar yen, yes, be careful with that transition down here. Don't get sell before you should. That's all there is. I'm gonna stop the recording now.